All right, ladies and gentlemen, welcome to today's session. My name is Kenny, and I'm from the Syfe's advisory team. I'll be your host for today, and we, of course, thank you for joining us for this evening. So for today, right, obviously, we'll talk about the UCITS as well as our ETFs. But before we do that, we'd love to see how you react to certain questions that we have. So for now, we'd love to see what kind of answers we have given our poll questions. Number one, with the US stock markets pulling back recently, just wanted to check whether you have any game plans. And of course, the first answer is to buy the dip, whereby, actually you can get it at a cheap valuation, or you can actually play it safe, moving to some funds into bonds, or perhaps to even stay on the sidelines, holding more cash and waiting things out. All right, so for now, it seems like most of us is still more on the buy the dip, which is a good sign because this is what actually most logical investors should be doing. All right, so let's take a look at the second question. How familiar are you with the UCITS ETF? And of course, heard of them, but don't know much. Okay, that's good. And then no idea what UCITS ETFs are is on the second. Somewhat familiar, know the basics. This is also a good sign. Very familiar. I invest in them regularly. Okay, so I guess this majority don't really know what it is, but they do heard of them before. So I guess that's a pretty good sign for the bulk of us here, right? And that's the reason why we have such webinars and seminars to talk about things like this. And of course, today, our agenda is very clear cut. Okay, we are going to talk more about UCITS and how we, as investors here in Singapore, can actually benefit from it. Okay, so let's move on to the agenda where we will talk very briefly about what's going to happen today. And of course, we have Sebastian here from Syfe, and he's going to help us to understand exactly how those UCITS ETFs work and what are their advantages. Then we'll also be deep diving into the kind of ETFs that we have that you can get access to. And finally, how you can get started here in Syfe. So briefly, this is what we're going to talk about. And without further ado, allow me to introduce our speakers for tonight. Today, we have Sebastian. He's our Chief Marketing Officer, who is also a pioneer in terms of building Syfe from ground up, right, from zero. And currently, he oversees the whole business functions from marketing and at the same time brokerage business. So obviously, we'll have a lot of insights from Sebastian, and then I would love to see what we can do. Sebastian, any words for us today?
Hello, good evening, everyone. Yeah, no, I think it's an exciting topic. I haven't done a webinar in a while, so I'm even more excited that it's this particular topic, which is very close to my heart. And looking forward to introducing UCITS ETFs and what can be done on the Syfe platform tonight, and also, of course, answer many questions from the audience. We make sure we have time in the end to answer as many of those questions possible.
Sounds good. Okay, then with this, obviously, thank you all for joining us for the evening. And then for those that's just joining us for the first time, allow me to give you an introduction of what Syfe is doing and what we are. So basically, Syfe is a digital investment platform whereby we aim to empower everyone, individuals, to build their wealth for a better future. And of course, we are here headquartered in Singapore and of course, licensed, mandated by the MES, right? So down here, we have a mobile first approach whereby you can actually do everything in one platform. So that's a good thing, right? And you get to invest with our managed portfolios. You get to trade with the brokerage. You can actually save with our cash management solutions too. And the good thing is, it's all in one platform, okay? And obviously, we like to encourage investing in a holistic manner or in one place. And then advisory team member like myself, will add on a human touch when it comes to support and guidance. And then next slide, we'll talk more on the quick snapshot of what happened back then. Was launched in 2019. And then, of course, throughout the years, many things have come to. And then we have produced different results and grow the company to a lot of extent. So obviously, we have the risk portfolio. Then we come up with the cash guaranteed. We have the fixed income portfolios. And just recently, last year, is the downside protected as well as the SRS. And notably today, we'll talk about the UCITS and how we can actually benefit from it. So for the next slide, I'm pretty sure a lot of people here are not new and you've been following us since day one. Then you realize that over the years, we always encourage and say that we are building, we are growing, and evolving as a business. So today, one component is the UCITS. Moving forward, you'll hear more from us about business, Syfe for business, bespoke solutions in terms of AI offerings exclusively for you, high net worth individuals. And then obviously, we're trying to do better in terms of DCA strategies, integration of the eGiro. So moving forward, stay tuned to us. More milestones ahead. And then let's talk more about UCITS today. So for now, take it away, Sebastian.
Great. Thanks, Kenny. Yeah, let us jump right into the topic and what UCITS ETFs are. If we go to the next slide, we'll see that UCITS basically stands for Undertakings for Collective Investments in Transferable Securities, which is an extremely complicated term. And we'll break this down in for everyone to understand what it basically means. UCITS ETFs are investment funds, very similar to other ETFs or a unit trust, but just that they are listed on a stock exchange. They are regulated under European law, and it's basically an easy way to get diversification, transparency, but also like tax efficiency. They are closely related or closely associated with the UK or the London Stock Exchange. So you wonder why is anything regulated under EU law actually has anything to do with the UK, which is not anymore in the European Union, is because they are Irish domiciled. So these funds are domiciled in Ireland and they are listed on exchanges all around Europe, including the London Stock Exchange, which is because it's the largest exchange, the exchange where most of them listed and where they also have the best or the highest liquidity. On the next slide, we're gonna go into a bit more detail on the tax efficiency. As most of you would probably know, is that you have a 30% dividend withholding tax on any of the US listed securities. What does that mean? If you have any stock or ETF and it pays a dividend, before the funds reach your account, they will deduct 30% tax, not on the capital gains. So if your stock increases from $100 to $200, this is a capital gain. If it increases in terms of value, there's a capital gain and this not taxed in Singapore. But on the dividends which the stock is paying, the US withholds a certain amount of tax. And for all US listed ETFs and stocks, this is 30%, while for UCITS ETFs, this is only half of that, meaning 15%. So if you have a stock which pays a high dividend of, let's say, 6%, the actual payout is closer to 4% after paying 30%, withholding tax. While for UCITS, this would still be around 5%. So I think that is already like a real key advantage of UCITS ETFs. There's also no US estate tax risk. So in the US, there are quite high estate taxes for assets above 60,000 US dollars. And this can be up to 40% on UCITS ETFs because they are not listed in the US. There is no such thing either. Something which is more of a convenience feature is that UCITS ETF often have an accumulating share class. What does that mean? That means that dividends are actually not paid out, but they're automatically reinvested, which is very convenient because if you have a $10,000 holding and 2% dividend would mean you get $200 in payouts every year, which is like takes extra effort and time, and sometimes on other platforms also money to actually pay for commissions to reinvest them. While the UCITS ETFs often have accumulating share classes, and as you will see, most of the ones we have listed on Syfe are of those share classes, and therefore dividends are automatically reinvested. Let's move on to the next slide, please. Um, with everything, there's always like advantages and disadvantages, and we want to also be transparent on those. Some UCITS ETFs have higher expense ratios. I would say in general they're slightly higher, but that is often more than compensated by the tax savings. But it's important that on a case-by-case basis, this is basically assessed and making sure that the UCITS ETF is really more advantageous in your situation or for that specific ETF. Generally, there is lower liquidity, and the next 2 points are actually quite closely related. Lower liquidity means like there's lower trading volumes, and therefore also the bid-ask spread can be wider. I think this is less relevant for long-term investors and retail investors who buy relatively small amounts compared to institutional investors, but it can still be a factor which needs to be considered. And today we will mostly focus on brokerage, but for me it was also important to cover our Syfe core portfolios. And on the next slide, we will see like how do we actually incorporate UCITS ETFs in our core portfolio. So this is part of our managed portfolio offering, where Syfe manages and constructs portfolios for our investors. And because of all the advantages which I've listed earlier, we also use UCITS ETFs in our managed portfolios. And so when we think about how to construct these portfolios, we look through this funnel, which is visualized here on this slide. And at some point, when we basically have decided, okay, what are the exposure we are looking for with a specific ETF, we will also consider the advantages of UCITS in terms of tax and other areas, and decide if it makes sense to use either a US listed ETF or they use its equivalent. And on the left side, you'll see a couple of examples of UCITS ETFs which are part of our core portfolios. CSPX, one very prominent one, and we will still look into CSPX in a bit more detail on one of the upcoming slides, where we will also share why we believe CSPX is actually the better choice compared to the US listed equivalent. So let us look into, now that we have roughly outlined what are the features and the advantages and disadvantages of UCITS ETFs, let us look into what do we offer on Syfe and what can you do with UCITS ETFs on our platform. So let us start with an overview of the ETFs we are offering. Amanda, if you please move forward by 2 slides. Exactly. I don't want to spend too much time on this slide because we go into each of these ETFs separately after this. But I think the one key message which I want to bring across here is that with only 6 ETFs, we basically cover a lot of the most important types of exposure which most investors on our platform are looking for. You can go for US focus, you can go for emerging markets, you can buy all world, meaning all the developed and emerging markets, or you can go for something like an MSCI World, which focused on global but only on developed markets, as well as most of them are equities, but we also have bond for like a bond ETF in our offering. So let us jump into them and go through each of them one by one. And let us start with CSPX, the one I mentioned already before. So CSPX tracks the S&P 500. So that are basically the 500 largest listed companies in the US. That means automatically this is so-called large cap. So the largest available companies. This ETF is accumulating, meaning that the dividends are not reinvested, are not distributed, but reinvested automatically. Um, you'll see on the top holdings, no surprise, you see the largest US companies, so Apple, Microsoft, Nvidia, etc., as part of the top holdings. This ETF exists since about 15 years and is more than $100 billion in assets under management and an extremely low expense ratio of 7 basis points or 0.0% per annum and an impressive 5-year return of almost 120%. We're all aware that the last couple of days where there was a little bit of a correction, but I think on the long term, I think has done really, really well. So let us look on the next slide on how this compares versus the US listed equivalent. So as you all know, can you please move to the next slide? Um, as you all know, S&P 500, there are many ETFs and funds out there which all track the same index and basically all contain the same constituents. Why CSPX stands out is that it has a very low expense ratio, very similar to SPY or VOO, which are US listed ETFs. It has a very decent market cap, with more than 100 billion. But you can see that the average daily trading value is quite a bit smaller. But that doesn't really, like as long as it is past a certain threshold, that is of not really a concern. Distribution yield is accumulating, right? So there's no dividends which are distributed, but it flows directly back into the fund and basically is used to buy more shares of all the underlying securities. And as you can see here, the total return over 5 years is significantly higher than the other two. And this is mostly a result of the lower withholding tax, which is the main factor which is driving the difference between the different returns, because the underlying securities would all be the same. They are all physical replication of the index and so on. So there's not many other differences than that. And I think this is a great example which shows like how powerful UCITS ETFs can be. If we move on and we go through the remaining ETFs, I think also extremely popular VWRA, the Vanguard FTSE All World UCITS ETF, that provides exposure to global equities. So that includes developing and emerging markets. So that is basically kind of your one ETF for global exposure. You have China in there, you have India in there. So you have all the developing or like the emerging markets in there, as well as developed markets. The emerging markets usually have a slightly higher expense ratio. Also, this ETF holds more than 3,000 stocks are part of this ETF, which means there's a slightly higher expense ratio of 0.22% and still a very impressive 5-year return of 91%. Top holdings, you will still find the large US companies as among the top holdings, but compared to the S&P 500, you can tell that they are still a lower percentage than when there's only US companies, and it's also like a smaller number of companies at S&P 500 compared to the FTSE All World index. Moving on to the next one, which is the Xtrackers S&P 500 equal weight. So what is the difference? The difference is there's, instead of market capitalization weighted, this one has an equal weightage across all 500 companies which are part of the S&P 500. So most of ETFs would basically have a market cap weighting, while this one distributes it equally. That means there is a a higher allocation towards the smaller constituents. I mean, they're all relatively big companies in the US, but because there is an equal weighting, smaller companies basically build a significantly higher share. 0.2% expense ratio, 97% 5-year return, and more than 10 billion in AUM. The top holdings, they are basically all around 0.2, which basically times 500 adds up to 100%. Why do not all companies at all time have the exact same share? It's because, of course, they change in value every day, and therefore, up until the ETF will be rebalanced, there are minor differences in how much what's the allocation across all the underlying stocks. Moving on to the next one, which is the MSCI World Focused X-Trackers ETF. What's the difference between MSCI World and FTSE All World? MSCI World is focused only on developed markets, right? So that would not have any China exposure or any other of the emerging markets. AUM 4 billion, expense ratio still very good, 0.12%, and a 5-year return of more than 100%. And again, similar top holdings than some of the US pure US focused ETFs. With that, we're moving on to something which is a little bit different than most of these earlier ones, which is the iShares Core MSCI Emerging Markets ETF. So that is really focused on emerging markets, and that, of course, immediately reflects on the top holdings, where you see that TSMC, Tencent, Alibaba, Samsung, Meituan are suddenly the top holdings, and you don't find any of the typical US companies which you would usually find in the top holdings. Also accumulating, I think from all of the above, I think there was only one distributing ETF actually. Most of them are accumulating, which I think is generally the choice for long-term investors who choose UCITS ETFs. This one actually quite big, 23 billion in AUM and an expense ratio of 0.18% per annum. With that, we move on to what I think is the last and sixth out of the ETFs, which is the iShares USD High Yield Corporate Bond UCITS ETF. So this one is a distributing ETF, and it distributes twice a year, and it offers currently a quite high dividend yield of 6.3%. And I think this is a great example of when UCITS ETF is really powerful, because there the 30% dividend withholding tax makes a very big difference, because at 6.3%, after 30% dividend withholding tax, you would basically have just about 4% in real dividend, which you actually have in your account. And so it's nice if you save half of that by investing through a UCITS ETF. Maybe very quickly, what is the exposure this ETF offers? This offers US denominated high yield corporate bonds. So debt issued by corporations, and the top holdings is One Main Finance, Teva, United Rentals. So like mostly US companies, all quite large in size, and typical for a fixed income ETF, an expense ratio of 0.5%, because there's significantly more work to do to manage fixed income ETFs compared to some of the pure equity ETFs. Yeah, so I think that gave a good a good overview of the UCITS ETF offering on Syfe. I think important there to mention is that this is our starting point. We will add more ETFs over time, depending on what we see from our customers, where the demand is and what people are asking for. And we will grow this number months over months to include really like everything which people are looking for. So now that we had kind of covered like what are UCITS ETFs as well as like what are the UCITS ETFs which are offered on Syfe, I want to like quickly go into how are they basically being offered on the Syfe platform. I think you could already tell from the type of ETFs and some of the features is that this is really a tool for mostly really long-term focused investors who don't really care as much as daily market fluctuations and really believe in the stock market in the long term, how it did over the last 150 years, will continue to increase in value and want to have a very cost-efficient way of participating in that growth. So if we move on to the next slide, please. We have found a way to offer that at lower rates than any other broker, at least in Singapore. So we are currently, until the end of April, charging 0 per trade. Even then after that, we are basically charging $0.99, so less than $1 flat per trade, regardless of the size of the trade, without any other fees or other surprises. How does it work? Basically, you place your order like any other order on our platform, and we'll have a screenshot or so on the next slide, but we'll quickly run through the theory first. And basically, we have a cutoff on Tuesday at 10 a.m. So we execute these orders only once per week. And on Tuesday, once the UK market opens, we are placing all the buy trades using TWAP. It's like a time-weighted average price. So that means the orders will be executed throughout the day, equally spread out over time, in order to basically make sure we have the most, like, basically we have very tight spreads because we are not placing very, very high, very large orders at any given time, but we are spreading it out. Sell orders, on the other hand, gonna be MOC orders, meaning market on close. So you will get exactly the price of the closing price of that day. If you're changing your mind and you wanna add or reduce or cancel your order, you can basically do this until Tuesday 10 a.m. At that time, the order will be logged in and then placed and executed throughout the day. And on Wednesday, you will be able to see the holdings you have and the exact price they were executed at. Let's have a very quick look on how does this really work in the app. I think it's very straightforward. Within the Syfe app, at the bottom, you have invest, trade, and save. Invest all our managed portfolios, trade, self-directed investing. That's what we are talking about today, as well as save, which are all our savings options, where you can get better returns than in your bank account, and just basically a good place to save for your savings. So you start with going on trade. You choose discover. There you have basically a section which are all the UCITS ETFs. You can, if you scroll down a little bit, you'll basically see the whole range of products. You can, of course, also use the search bar at the very top. you search the ETF, one of the six which I introduced earlier today. You place your trade by amount, meaning you would not place the trade as a number of units, but you simply place it in a dollar value. And you can basically as easily say, okay, I want to buy $500 worth of any of these ETFs. And you can also very easily set up auto invest. And I think this is very, very relevant for this specific one. You can very easily basically say, okay, I do $1,000 and I do it every month, and it will execute every month on the week you have chosen on the Tuesday of that week, unless it's a public holiday, then it will automatically be on the day after. Yeah, so I think that pretty much wraps up our presentation. But as promised in the beginning, we have time for some questions, and let us jump right into that. Stay with us. We are trying to bring up some of the questions. And okay, cool. Let me immediately start with taking up the first one, Kenny. Why are orders only executed on Tuesday? I think we could have basically chosen any other day. I think why we decided to execute on one specific day is because we really want to offer this super cost efficient, and so that's why we are basically placing these orders all on one day. Over time, we will add more days and probably will move from placing orders only on Tuesdays to placing orders twice a week, could be Tuesday and Thursday, eventually, hopefully 3 times a day, and maybe eventually daily, or maybe even in real time. For the time being, in order to provide really with this super cost efficient price, which is really like definitely the lowest in the market, we have decided to basically combine these trades all on Tuesday.
Sebastian, I'm just taking a look at the questions, right? And it seems like some of those questions are targeted towards the cost. And then what kind of fees are we looking at? What kind of pricing are we going to have? Could you share more about that?
Yeah. Yeah, I think that's a good question. So as I mentioned earlier, currently commissions are at zero. We eventually from May onwards will charge 99 cents for each trade, flat, regardless of the amount. There is the Singapore dollar need to be converted to US dollar, where we offer very competitive rates, and everyone can basically convert them directly on the Syfe platform. You will see transparently exactly what the rate is. You can confirm that. You'll get your US dollar, and you can basically place the trade. There is no other costs than that. In terms of price, because we are using this TWAP order, time weighted average price, you will get the average price of the day for your order. And that also ensures that there is a not very high spread, because we are spreading out the order throughout the day and not placing one very, very large order at any given time. Yeah, so there was a question on management fee or custody. So there's no custody charges on Syfe. In general, on brokerage, we don't have custody charges. We are having a commission when people buy or sell on other securities, except for UCITS ETFs, but we don't have any ongoing custody charges um, for any of our products on our brokerage platform. We do have a management fee for our managed portfolios, where we on an ongoing basis also manage the portfolio, meaning we will rebalance it automatically. We invest dividends for our customers and so on. So, Kenny, you want me to just go start here at the top and go down the list, or how do you suggest we're gonna best do that?
Right. So I'm seeing there's quite a big vote in terms of dividends being distributed, right? So we can start from there.
Okay. Um, so in general, stocks, if there's a dividend, um, every dividend has an ex-dividend date and then has a dividend payout date. On the date when the dividend is paid out, it will basically be shown in your account. It will basically increase your cash balance and therefore your buying power. For UCITS ETFs which are accumulating, the concept doesn't really exist. So already the fund itself will take the dividend and use it to buy more of the underlying stocks, right? So there is no dividend being distributed to, to the investor, but the fund already itself takes care of that directly.
Sounds good. And then I was just looking at one question about the core balance portfolio with regards to CSPX addition, right? So the question is about portfolios like our managed portfolios already have things like UCITS, right? So should we still get more or should we just stick to our normal managed portfolios? What do you think?
Okay. I mean, I think this is like hard to give a blanket answer on that. It really depends on your individual situation. If if you believe that your core balance portfolio does not have enough equity exposure, and you're at this moment in time believe you wanna top up, maybe buy the dip, or like then I think buying yourself into CSPX separately could be a good idea. But yes, it's basically also already in your portfolio, but you can basically use the brokerage to just add on and increase your allocation to CSPX. The alternative would be to go from a balanced portfolio to a more growth focused portfolio. So we have defensive, balance, growth, and pure equities. So also if you move from balance to growth or pure equities, what we call equity 100, you would also increase your allocation to equities. So there's a couple of different options of how you can do that.
Right.
Um,
Well, I mean, just to add on also, because our managed portfolios, right, tend to have a level of UCITS, right? But it is not 100% UCITS. So based on last year's rebalancing, we actually talked a little bit about it. We've increased the allocation to around 30 to 40% of it. So if any clients wants to get more exposure to things like CSPX, VWRA, then you can actually just use more allocation into it. So I think it's a very good point. Most people will be quite curious about this portion also. All right, so why don't we look at the next question? Let's go back to the other page.
yeah, so I think maybe if I'll just pick up the first one. Um, so for UCITS ETFs, how much charge per month? And buying VO using for free trades, there's no monthly charge. Yeah. So I think it's correct that basically you can also use your free trades on for our US listed stocks. So I think the commission, I think, is only one factor, right? I think the other factor is really what I mentioned earlier, right? VOO versus CSPX, you will save a lot on dividend withholding tax, and also VOO is distributing dividends, meaning if you buy into VOO, you need to reinvest them, or whatever you want to do with it, but you need to do something yourself with the dividends. With CSPX, this is basically automatic. And in terms of monthly charges, there's no difference. You buy CSPX, there's no monthly charge, exactly the same as VOO. There's also no monthly charge. So it really, I think the main difference is what you need to decide is, do you want to have something which distributes dividends or accumulating? And is it, if you buy it for the long term, and you're not only about growth, but also the dividend income, then you should really consider going for UCITS ETF, which has the lower dividend withholding tax.
All right. Then one question that is quite popular is about the denomination of currency for UCITS. Are they all in USD? Can we also do like Singapore dollars?
That's a fantastic question. Yeah, so all UCITS ETFs we offer are in US dollar. There are euro denominated and British pound denominated UCITS ETFs as well, but we don't have them on our platform. There are unfortunately no Singapore dollar denominated ones. If you were to invest 1,000 Singapore dollars, you would basically get something like 700 US dollar worth of the UCITS ETFs of your choice. And this currency conversion happens automatically when you buy. If you prefer to do it yourself, you can do it. And as I mentioned earlier on Syfe, you'll basically go and pick the currency conversion functionality, and you will see exactly what is the FX rate you will get, and you can convert it in real time.
All right, sounds good. That I guess there's some level of flexibility, right? At least the clients can choose what kind of FX they want to have. Then they can purchase the level of ETF. All right, sounds good. Then let's look at the SRS. Are we going to launch this to SRS?
Um, Unfortunately, this is currently not possible. There are, SRS has limitations on what you can buy with SRS funds.
Right.
Currently, UCITS ETFs is not part of that. But yeah, I think there's some of our other portfolios, our managed portfolios are available for SRS monies, and they can be used for those. UCITS ETFs are currently not available for SRS. It's not part of all the SRS of SRS's investment universe.
All right, let's take a look at other questions. Order types. Okay, so for this one, I will just add in a little bit. So for Syfe, right, UCITS orders are mainly just market orders. And then for now, we're still experimenting on the different kind of use cases. But at this point in time, we are doing it on a one-time basis per week. That will be the 2 p.m. And then hopefully moving forward, when we explore more ways, we can build it into a more liquid purchasing, right, in terms of transaction. So you'll be able to do it more often. And then you can also get your returns and settlement more quickly. That's something we can work on more, right, Sebastian?
Yeah, I think for the use case which we think this is really suitable, which is for people who want to accumulate, um, like allocations, or we want to accumulate over a very long time. I don't think it's about, timing the market and trying to see if you can get, a few cents better price or low, like higher or lower price. I think it's really about making sure you buy regularly, every month you are disciplined. And there really the auto invest feature helps. And then you make sure that you really do this in a cost efficient way.
Right.
And cost efficient way, I think, on two sides. One, on what fees do you pay to the platform where you buy it? And at the same time, do you choose an investment vehicle which is cost efficient? And in this case, it is mostly around tax efficiency. And I think Syfe is the most cost efficient platform to buy, and UCITS is the most tax efficient vehicle to buy. So I think for this use case, it doesn't really matter timing the market is really not really the what makes the difference, I guess.
Sure, sounds good. And then I was also looking just at one question here, which is quite applicable. The question is more towards general advantages and disadvantages around ETFs and mutual funds. And then what are your thoughts on that?
I think we have a whole long article on our website on this. I guess mutual funds in general are significantly more expensive than exchange traded funds. So I think the average management fee of a unit trust or a mutual fund is still above 1% per year. And I think the most expensive ETF which we have introduced today was at 0.5%, and some even as low as 0.07% if I remember correctly. So there is a big difference in terms of costs. Um, Mutual funds also often are actively managed rather than tracking an index. And there's a lot of data that in the long term, active management does actually underperform an index and basically underperforms the market. Managed portfolios in Syfe are a bit different. They are built with ETFs because of the lower cost, and it's a very quantitative models. So this is like a kind of for example, a smart beta investment strategy, which uses purely quantitative, um, um, which is basically uses factors such as um, like large cap versus small cap, um, volatility, and such thing to optimize the portfolio, which can lead to higher returns. But I think it's also something which basically is hands off. So an ETF still requires, the person to decide which ETFs do I want to choose. Is this the right ETF? How much should I put into ETF A over ETF B? The managed portfolio basically takes care of this and gives you a basket of ETFs. And this ETF portfolio will also be managed, rebalanced over time to, make it more resilient to whatever the current market conditions are.
Mm-hmm. Yeah, I think that's a very valid point. So when it comes to unit trusts as well as passive indexes, I think the main point is more towards not trying to time the markets, getting more diversified at a low cost manner. So for this one, I do agree with you. Most of the time, active managers don't really do outperform the markets. So that's a very good one. And then with the interest of time, I will let you pick one last question, and then we'll see what you can do for the participants here today.
Sure. I'm happy to run through very quickly on a few of those.
Sure,
Can
sure,
I
go for it.
transfer USD to Syfe? Yes. Short answer, very simple. Yes. You can also directly transfer US dollars to Syfe and use that to invest um, and buy UCITS ETFs or any other of the stocks. If you show me the overview again, if I place a sell order on Monday evening, the order is executed on Tuesday. You have the money on Wednesday to place any other orders. Currently, as Kenny already mentioned, we only do market orders. We don't do limit orders at this point in time. The dividend yield for CSPX is basically the same dividend yield as any other S&P 500 ETF. The only difference is that it does not really like show, it's like 1.3% or somewhere around there. But instead of being distributed, it's basically reinvested. But it's pretty much because it's the same underlyings, it will have the same dividends as any other ETF. And by the way, if you look at the 5-year return comparisons which we had earlier, all of these comparisons were like-to-like comparisons, meaning that would also include the dividends for distributing ETFs. So it's not a comparison where we compare including dividends versus excluding dividends or anything like that. Um, So then there's two more questions which got at least a vote. So let us at least cover um, those two. Can you review again what you said about downside of reduced liquidity? We should be able to sell anytime using Syfe, right? Um, so no, basically on UCITS ETF specifically, all other security stocks ETFs on the Syfe brokerage, you can sell at any time in real time whenever the market is open. For UCITS ETFs, we basically execute orders only once a week. So as I just mentioned, if you basically place a sell order on Monday night or Tuesday morning, it basically before, as long as it's before 10 a.m., we will execute it on Tuesday, and you have the funds in your account to make new trades or withdraw on Wednesday. Yeah. So which question did I not yet answer? What is the difference between VOO and CSPX? There's basically no difference in the underlying. It's just a different fund structure, and dividends are being reinvested. That's the main difference. And the advantage of this is the dividend withholding tax. Yeah, I think most of these questions we have answered.
Right.
Um, Great. Thanks everyone for tuning in today.
Right. So appreciate your time today, Sebastian. Thanks for giving us a good insight on how we can use UCITS to add on to our education, and that can give us a more cost-efficient manner to invest. And at the same time, down here, we love to help. So me and the advisory team, feel free to drop us an email, advisory@syfe.com. Then if you say you got further questions, feel free to let us know. We can connect with you afterwards, either through a phone call, calendly, video call, or maybe even through a physical meeting, right? So let's speak a bit more, and then let's bounce some ideas. In the meantime, let us know any feedbacks, any usage you want to do. We can actually explore and then further our horizons here. Good stuff here, Sebastian.
Cool. All right. Thanks for hosting us today. And yeah, everyone have a very good evening, and hope to see you in one of our future webinars. Have a
All
good
right.
evening. Bye.
Thank you so much. Have a nice evening, everyone.